Salutations, fellow plant designers. I am Putrawan, and welcome to our video on cost accounting and capital cost, chemical engineering cost index, capital investment cost, and total capital investment, brought to you by Expert Team 7A. So let's start off with the cost index. So a cost index is a ratio of the cost of something today to the cost of that same thing sometime in the past. It is a dimensionless value and a very sensitive towards technological change. Thus, updates are needed in a timely manner. Consumer Price Index is a popular common example of a cost index amongst people. It is the relationship between the present and past costs for typical consumers' purchases such as transportation, food services, etc. So here's the general equation of updating costs using cost index over a period of time. CT is estimated as the cost at present time t. C0 is the cost at previous time t naught. IT is the index value at time t, while I0 is the index value at time t naught. Here is a table of sources that can be used as reference to find cost indexes of various things. Starting from overall prices of consumer products to equipments as well as constructions of different kinds of things that are needed in a plant. Okay, so let's take a look at an example of cost index that we can actually apply in our daily life and also later on in our plant design. So in this question, we see that we are going to evaluate the feasibility of a major construction project. An engineer is interested in estimating the cost of skilled labor for the job. The engineer finds that a project of similar complexity and magnitude was completed 5 years ago at a skilled labor cost of $360,000. The engineering news record (ENR) skilled labor index was 3,496, then now 5,127. So what is the estimated skilled labor cost for the new project? And so here's the answer. The base time t0 is 5 years ago. So using the equation, we can calculate the present cost as 360,000 multiplied with 5,127 over 3,496, which gives us $527,952 as our cost.
So let's dive into the next part, which is the total capital investment part 1. Let's look at the overview of total capital investment (TCI). Total capital investment for chemical plants includes the expenses for design, construction, and startup. This is similar to the cost involved in purchasing a new house, where the price includes land purchase, building permits, excavation, utilities, construction, and landscaping. TCI can be broken down into various components. A significant part of these are the bare module costs, which cover on-site process equipment and machinery. This equipment can either be custom designed to meet specific needs or selected from standard options provided by the vendors. Each module within a plant contains not just the main equipment or machinery, but also all necessary materials for its installation. This includes piping, foundations, supporting structures, instruments, and more on. Estimating the installation cost involves using factored cost methods based on the purchase cost of the equipment. These methods consider direct costs like materials and labor, as well as indirect costs associated with the installation process. Components of capital investment can be divided into many parts. The first one is the cost for fabricated equipment such as vessel and column. Second one is for process machinery such as pump and fuller. We also have cost for spares, which is the spare items of equipment such as spare pump and gasket. Then we have cost for catalyst, cost for storage, and total bare module investment, which is the cost for on-site parts of the plant, which is divided into fabricated process equipment and process machinery. Next, we have the cost for site preparation, which is the site preparation cost, which includes land surveys, dewatering, drainage, surface clearing, and rock blasting. Next, we have the cost for service facilities, which is the cost for additional facilities and infrastructure such as utility lines, control rooms, laboratories, maintenance shops, and other necessary buildings. On top of that, we also have allocated costs for utilities and facilities. Next, we have the cost for direct permanent investment, cost of contingencies and contractor fees, which is the cost for unexpected expenses during plant construction and maintenance. Next, we have total depreciable capital, cost of land, and cost of varieties is the cost associated with using patented products or processes. It may involve a one-time fee included in the capital investment as a royalty or paid-up license. Next, we have the cost of plant startup, and followed by the total permanent investment. And the next one is the cost for working capital, which is the funds required to cover early operating costs, which includes inventory costs and funds for accounts receivable. And finally, we have the total capital investment. That's all for the components of CI.
The next part is the estimation of the total capital investment. For this section, there will be three methods that will be covered. Hello, my name is Mama Afiq, and I'm going to be presenting for the first method of estimation of the total capital investment, which is order of magnitude estimate. The order of magnitude method is to determine whether a new process is worth pursuing. It is only useful for low-pressure petrochemical plants. The accuracy is plus minus 50%. For the cases of moderate to high processes, the actual cost is twice as the estimated value. Two things are needed, which are the production rate and flow sheet. For this method, heat exchangers and liquid pumps are not considered, as well as the mass and energy balance calculations. Before anything, the process has to be sufficiently studied and the flow sheet is completed. For the case of major piece is greater than 100 psi, the design pressure will be considered. So firstly, we have to establish the production rate of the main product in pounds per year, which is to convert the unit to pounds per year, and then calculate the production rate factor FPR using the 6/10 rule using the formula given. So the second method is to calculate the module cost CM using a process flow sheet. It is for purchasing, delivering, and setting in place each major piece of equipment, such as gas compressors and blowers. For this calculation, it is required to use the material factor. So the listed values are for different materials. So the step 3 is to find the value for CTBM, which is the total bare module investment using the formula given. So for this step, the factor FPI will be used for different type of processes. The next step is to obtain the direct permanent investment CDPI. So for this calculation, it will be considered two factors, which is F1 and F2, which accounts the site preparation, service facilities, utility plans, and other related facilities. The final step is to obtain total permanent investment CTPI using the previous value from step 4 and the total capital investment CTCI.
Hi everyone, I'm Yee Jun and I will explain method 2.
So method 2 is study estimate, also known as the Lang method. It uses overall factors that multiply delivery cost of processing equipment. So the accuracy is a bit better than method 1, about 35% error. So the requirements are flow sheet including sizing of all equipment and manufacturing overhead costs MOC. The freight on board FOB purchase cost of all equipment. Purchase costs for a particular base year should already be known. The purchase cost of equipment was based on year 1977 and the corresponding MS index for that year is 514. The two equations below shows the formula that will be used in method 2. We will multiply by 1.05 to account for delivery charges and then multiply by a Lang factor to obtain the total permanent investment or the total capital investment. That includes 15% estimate of the work capital. The value of lung factors are referred in the table below. So the lung factor depends on the type of processing plant, whether it's solids, solid fluids, or fluids. So there are lung factors that does not include the work capital and lung factors that includes the work capital. So the value of lung factor from the table just now, the values are obtained from this table 22.17. So here is an example to calculate the total capital investment using the lungs method. So the diagram below shows the process flow diagram of a cyclohexane plant. So this is the question for example 16.3 in our CIDR textbook. So from the question, we know that our index is based on year 2006. And then also we will have a table of equipment list that includes all the purchase costs for all the equipments based on year 1977. The table shows the purchase cost of all the equipments based on the MS Index 514. We sum up all the purchase costs and then we can substitute the value into the formula of the total capital investment. And then in this case, we're using the lung factor that includes the work capital, and this plant is a fluid processing plant, so our lung factor is 5.93. And the cost index and base cost index are given, so we just substitute the value into the formula and then we'll get our total capital investment. So method 3 is the last method that we're going to learn today. So method 3 is preliminary estimate, also known as the Guthrie method. So this also uses the overall factors that multiply delivered cost of processing equipment. So the accuracy is better than the two methods before, that is, it has about 20% error. So requirements are flow sheet including sizing of all equipment and MOC, the FOB purchase cost of all equipments is best carried out after optimal process design, and to have complete material and energy balances, equipment sizing and decision on materials of construction, and process control configuration developed as in the PNID. In method 3, we will compute the FOB equipment cost and update them to the current cost index. In the Guthrie method, the FOB purchase cost is the base cost corresponding to near ambient design pressure, carbon steel as the MOC, and a base design. So below shows the equation or the formula that will be used in method 3. The bare module factors of the Guthrie method, the FBM, the values can be obtained from this table. This table is table 16.11 in our CIDR textbook. Here is an example, 16.5 from CIDR textbook. So from the question, we are given the total bare module cost and also the off-site utility cost and the working capital. Next, to calculate the cost of site, from the question, we know that there is an integrated complex. So the integrated complex is 4 to 6% of the total bare module cost. In this case, we assume it to be 5%. Next is the cost of buildings. So there is only integrated complex, so it's 5% of the total bare module cost. Next is the cost of offsite facilities. So it's the cost of utility plants plus 5% of the total bare module cost. And then next, we can compute the total permanent investment. And then the working capital is given. So next, we can calculate the total capital investment. For grassroots plant, additional of 25% of total bare module cost is added for site development and buildings. Here is an example, 16.5 from CIDR textbook. So from the question, we are given the total bare module cost and also the off-site utility cost and the working capital. Next, to calculate the cost of site, from the question, we know that there is an integrated complex. So the integrated complex is 4 to 6% of the total bare module cost. In this case, we assume it to be 5%. Next is the cost of buildings. So there is only integrated complex, so it's 5% of the total bare module cost. Next is the cost of offsite facilities. So it's the cost of utility plants plus 5% of the total bare module cost. And then next, we can compute the total permanent investment. And then the working capital is given. So next, we can calculate the total capital investment. For grassroots plant, additional of 25% of total bare module cost is added for site development and buildings. For summary of the capital cost estimation, we learn to assess the financial condition of a company by applying financial ratio analysis to data given in its annual report. We learn to estimate the purchase cost of equipment items using provided equations together with cost indexes to update those costs. We can estimate each of the other costs included in the capital cost of a plant and apply the concept of the bare module cost. We learn to estimate the total capital investment of a plant by three methods that range from order of magnitude, Hill's method, to preliminary estimates, the Guthrie method.
So next we move to capital investment cost. In capital investment cost, we have direct and indirect costs. For direct costs, we have material and labor. For cost of material, such as cost of concrete for foundation, steel for structural support, piping from and to other module, instruments and controller, lighting and electrical materials, insulation and paint. So for the formula is Cm equal to alpha MC Cp. And next is for cost of field labor, which is Cl, setting in place of heat exchanger, installation of associated piping, other labor costs utilizing the field material. The equation used is Cl equal to bracket 1 plus alpha m multiply with alpha LCP. So this is table 16.1 by Guthrie. The example of installation cost for a heat exchanger to give the bare module cost. For indirect costs, which is overhead, costs that are shared among several projects and are allocated to the individual project, such as indirect expense, CFIT, cost of freight to deliver the equipment to the plant site with associated insurance and tax. The equation is CFIT equal to 1 plus alpha m multiplied with alpha FIT CP. Second is construction overhead CO. Fringe benefit for workers, health insurance, vacation pay, and sick leave. Second is burden, which is social security tax, unemployment insurance, salary and cost of temporary building, road, parking areas, crane and machinery. So to calculate CO, the equation is 1 plus alpha m multiplied with alpha L alpha OCP. Next, contractor engineering expense CE, which is cost of engineering, salaries for project and process engineers, designer, procurement expenses, and home office expenses. The equation is CE equal to 1 plus alpha m multiplied with alpha ECP. So to calculate bare module cost CBM, the equation is total of indirect module expenses plus with total of direct module expenses plus CL and plus CM. So in table 16.11, there is example of ordinary material of construction and its FBM, which is bare module factor. So to calculate bare module cost, we use bare module approach, which is CBM equal to CP multiplied with FBM. CP is purchase equipment cost and FBM is bare module factor. So to calculate FBM, we use equation 1 plus alpha m multiplied with 1 plus alpha L plus alpha FIT plus alpha L alpha O plus alpha E. So bare module factor vary among different type of fabricated equipment and process machinery. So for example, given is direct field material CM and equipment purchase CP, and then direct field labor CL, combine direct field materials and labor CM plus CP plus CL, and also the indirect module expenses CIE. So the question asks to calculate total bare module factor FBM. So to calculate total bare module factor FBM, first we need to calculate the combined direct field materials and labor factor, which is CM plus CP plus CL divide by CP, and we got 2.344. And then we calculate indirect factor by plus CM plus CP plus CL plus CIE and divide by CM plus CP plus CL, and we got the value for indirect factor is 1.404. So FBN is calculated by multiply combined and direct field material and labor factor with indirect factor, and we got the FBM is 3.291.
So next, let's continue with the equipment costing spreadsheet, where we use the Excel to calculate the equipment cost. So for the first method, let's try this example from the book to solve by using the Excel that we already created. And from this example, we need to highlight the MS cost index, the conversion of toluene of benzene, and also the operation time to calculate the production rate of the benzene. And we need to highlight the material of the major equipment like carbon steel, and also the condition of the plant that constructed outdoors with major additions to existing facilities. So for the first step, we need to insert the production rate in the Excel spreadsheet, and it will automatically calculate for the production rate factor FP out. So basically in the Excel, there is some note that we need to follow, like the yellow box is for the user defined, where the user can put any value in the box, and for the blue box, the user only can choose from the drop down list. For step 2, we need to insert design pressure and number of equipment involved, then select the material used. So before we go into that, we need to input the MS cost index first, which is 1400 based on the example. And then we need to input the number of equipment and also the pressure. So here we got one gas compressor at 570 psi, one reactor at 570 psi, 3 distillation columns at 100 psi, one absorber at 100 psi, and then we choose the material used. So the blue box here, we can choose whether it's carbon steel, copper, stainless steel, nickel alloy, titanium clad, and or Na if there is no equipment there. So here we just choose the carbon steel for each equipment and Na for the other equipment, and then the calculation will be automatically be done for the module cost and also the total module cost. So here there is some note here: if design pressure is more than 100 psi, additional factor to take into account of the higher pressure. So here you don't need to worry about this because we already set the formula in the module cost, where it will calculate automatically using the additional factor here. So here I just want to highlight that this method is not covered for the heat exchanger, flash or reflux drum or liquid pumps. So then for the step 3, we just choose the type of the process involved. So here we got blue box for the type of process, where we can choose whether it's solid handling, solid fluid handling or fluid handling. So here we choose the fluid handling based on the example, and we automatically show the FPI is 2.15, and it will automatically calculate for the total by module investment CTBM. Then for the last step, step 4, we need to choose factor to account for site preparation, service facilities, utility plants, and related facilities. So for the F1, so the blue box here, we can choose whether it's outdoor construction, mixed indoor and outdoor construction, indoor construction, or NA. And for the F2 here, we can choose whether it's minor addition to existing facilities, major additions to existing facilities, grassroots plant, or NA. So here, based on the example, for the F1 is the outdoor construction, and will automatically show 0.15 for F1, and for the F2 is 0.3 for the major additions to existing facilities. Then it will automatically calculate for the total capital cost for the equipments. Then let's continue with the second method. This is the example that we take from the textbook. So the example want to estimate the total capital investment as of the year 2006. So here we just highlight the MS index for 2006, which is 1365. This MS index will be used in the Excel spreadsheet to calculate the estimated capital investment as of the year 2006.
For this method, it just consists two steps. For the first step, just complete the equipment list, and the second step, choose the appropriate line factors. So for the first step, we just need to complete the equipment name, equipment label, size, design temperature in Fahrenheit, design pressure in PSIE, and also CP, FOB purchase cost. So here, we just refer the textbook from the table 1618. And the CP FLP purchase cost here is referring to the MS index 540 corresponding MS index, and the updated MS index is referred to the example which is 1365. And then after we completing the equipment list, we need to choose the appropriate line factors referring what is the condition for the processing plant. So here the example is the fluid processing plant. So FLTPI we choose 5.04 and FLTCI 5.93. So then I will automatically calculate it for the estimated total permanent investment and also total capital investment. So next with the third method, this example also take from the textbook. So the example gives the FOB purchase cost for the vertical pressure vessel at 1995 is 102 million with the CE index with 381. So the example want to calculate the bare module cost for the year 2006 with CE index with 500, and given that the vessel is made from the stainless steel, and also given the factors like FBM, FD, FP, and also FM. For the first step in this method, we need to complete the equipment list. We need to insert the updated MS index and also the corresponding MS index. And next, we continue with the equipment. Since the example, we just got one equipment, which is pressure vessel. So there's only have one row for this table. And we need to insert the equipment label, size, temperature, pressure, FOB purchase cost, refer to the corresponding MS index, pressure factor, and also the equipment design factor. And then after we completing this equipment list, we jump to the second step, which is choose the appropriate bare module factor and material factor. So based on the example, the bare module factor is the vertical pressure vessel, and it will automatically show the 4.16 in the table. And then for the material factor used for this pressure vessel is the stainless steel. We just choose stainless steel in the blue box here, and will be automatically show the 2.0 for the factor. So for the next step, we need to calculate the utility cost. So we need to input the value for the steam, electricity, cooling water, processed water, and also the refrigeration. So this value must be within the range of the size factor that has been set for each utility. And after we input the value, it will automatically calculate the allocated cost, and it will sum up the cost as the cost of utilities. And then we need to input the percentage for the site development cost, building cost, and off-site facilities cost. So based on example, all of this cost is just 5% from the bare module cost. And then it will automatically calculate for the total permanent investment, working capital, and also the total capital investment.